Hey everyone, welcome back to Corporate Decoder, the place where we sift through financial filings so you don't have to. Today, we're diving into the Hamilton Beach Brands holding company's latest annual report, and trust me, it's a wild ride. We're talking potential kitchen appliance dominance to healthcare management. Hamilton Beach, known for those blenders and toasters, just dropped its annual report for 2024. It's more than just appliances, it's an interesting story of diversifying and navigating a tricky market. So, what's a Form 10-K? It's a comprehensive report that public companies file annually, giving everyone a deep dive into their business. We're talking financial performance, potential risks, and management's perspective. It's the whole shebang. First up, the main gig, the home and commercial products segment. This is where those classic Hamilton Beach appliances live, the blenders, coffee makers, all those kitchen staples. They're sold all over North America, from your local Target to Amazon. Plus, they sell commercial stuff globally, basically heavy-duty versions of their home appliances for restaurants and hotels. Now, here's where things get interesting, their health segment. This segment is a lot of leasing medical devices and software. That's their new push into the connected health space, which may diversify their future revenue in upcoming years. Let's talk about who's buying all these products. Walmart is huge, accounting for almost 30% of Hamilton Beach's revenue. Amazon's right behind them at almost 25%. That said, they don't have any long-term contracts with these giants, meaning they need to keep those orders rolling in or else. How do they make all these appliances? It is mostly outsourcing. They work with suppliers and ship these goods into America. China plays a big part in where they get their finished goods. Of course, there are competitors. How do they measure up? Hamilton Beach themselves say it's all about innovation, quality, and price. Now, shifting gears to people. Hamilton Beach has roughly 700 employees across the globe. They seem to really push a company culture of good thinking, a philosophy that embodies teamwork, service, and inspired innovation in every aspect of our business. Who's steering the ship? R. Scott Tidy took over as CEO towards the end of 2024. Sally Cunningham is the CFO, so it seems like they have a well-rounded team over there. Now for the not-so-fun part, the risks. Every company has them, and Hamilton Beach lays them all out. First, the economy. If people aren't buying, Hamilton Beach isn't selling. Consumer confidence is key for them, but also a lot of factors are outside their control. A big one is relying on those big retailers we talked about. If Walmart or Amazon decide to cut back, that would hurt, and they don't have contracts guaranteeing future sales with these retailers. Then there's the rise of store brands. Target and Walmart making their own toasters is more competition for Hamilton Beach. Another is innovation. If they don't keep making cool new stuff, people will stop buying. Gotta keep up with the times. Cybersecurity incidents at key customers, something we're hearing about more and more these days, could severely impact our sales in the short term, especially with the large dependency of some of their larger retailers' online marketplaces. Rising costs are a constant threat. This includes raw materials to transportation fees. They might not be able to raise prices enough to cover it. IT disruptions and cybersecurity. This is a big deal for any company these days. If their systems go down or get hacked, it could disrupt everything and give them a regulatory headache. They're also upgrading their computer systems. That sounds boring, but these transitions can be tricky and could disrupt business if they don't go smoothly. Plus, compliance with global laws, including anti-corruption laws. It's more complicated when you're doing business everywhere, and making sure they're not breaking any laws is a costly, constant thing that needs to be done. Okay, now let's look at some numbers to see what's going on. Revenue went up by $29.1 million, or 4.6% compared to last year. That sounds great, especially with the home and commercial products segment doing really well in North America. They're selling more stuff at a better mix. Their gross profit margin increased, meaning they're making more money on each product, mostly because their product and transportation costs are down. Interest expenses are down. That's a good thing. They are probably paying off debt from the past few years. It means they can use that money elsewhere. Cash flow is down a bit. They brought in $65.4 million in cash from operations, which sounds like a lot, but it's less than last year. However, what this represents is that after a wild ride in the post-pandemic times, operations are normalizing. Here's another money thing. They've got a $125 million credit line. So they have some financial flexibility if they need it, and they renegotiated terms in the prior year, which extended the term on the credit facility. This is really good management. What do they have to pay? They have hundreds of millions in purchase obligations, most of which are due very soon, and some longer term in lease obligations. As of right now, it looks like they have their finances in order. They do have some exposure to fluctuating interest rates, which could increase their debt. And because they're doing business globally, their sales get affected by currency exchange rates. If the US dollar gets too strong, their products get more expensive overseas, potentially hurting sales. Now about corporate governance. They've got a code of ethics on their website. And if you want all the nitty-gritty details, they have a lot of those files you can check on their website to further inform your financial assessment. Also, they have insider trading policies, so that keeps everyone behaving themselves. Okay, putting it all together, Hamilton Beach is trying to become more than just your grandma's blender. They are making a big bet on health tech. But there are risks: the economy, competition, cybersecurity, all the usual suspects. Also, relying on Walmart and Amazon is a big deal because so much of their revenue depends on these retailers. But the numbers look solid enough. They have 45.6 million in cash. So what's the call? Hamilton Beach is a classic brand that's trying to adapt, and the expansion into connected health products will be important for their future. Keep an eye on those big customer relationships and how they manage those global risks. Thanks for watching. If you found this deep dive helpful, smash that like button, drop a comment, and definitely subscribe for more corporate decoding. See you next time.